well, just run us through some of the devil in the detail of these figures first.
Good morning to you and your viewers. And, we've got a pretty decent quarters given the environment that we all saw in the last 6-8 weeks. Overall, we are pleased that we've grown by 10.7% in constant currency terms in the last quarter. Over the last year, we have grew the revenue by about 13.7%. And our order book has been pretty strong. We signed contracts worth about $10 billion in the last quarter, $3.1 billion from the financial services industry, North America, about $5 billion. Overall, I think it's been a decent quarter. Yes, there are certain headwinds, but with supply side is easing up. I think we've got enough levers to look at the future with a lot of optimism.
Ganapathy, what are those headwinds, and which are the worst performing businesses or the businesses which need you to address more now?
I think one is the overall macroeconomic situation, like inflation and the war situation in Europe. I think they continue to be there. And that's something that our customers are confident that they can be dealt with because there are situations that they have dealt with before. But I think, what looming big was the financial institutions that, like SVB situation and the credit situation in Europe. These two things kind of held the spend a little, at least a little in the both North America and Europe. There are no budget cuts or cancellations per se. I think the customers to whom we have spoken to, they all felt that, look, let's spend wisely, let's step back a bit. Whatever we could defer a bit, we will defer it. But there are projects like cloud transformations, artificial intelligence. Those are absolutely important and critical that we should get on with it. I think, that's a little bit of caution there. But what differentiates this crisis from the past one is that there's no chain reaction per se. Government interventions have been solid and strong. I think, that should augur well in the medium to long term.
Right, Ganapathy, you talk about SVB. How about Credit Suisse and UBS? Any exposure there?
We have exposure to large banks. Credit Suisse is one of our large customers. But our exposure to regional banks in the US side is very marginal and minimal. But having said that, look, both UBS and Credit Suisse, they have time, to deal with this. And then the government support and government interventions have been pretty decent. In our conversations with large institutions, I think, as I said, let's step back a bit, spend wisely, defer what we could defer for a quarter or so. And then, I hope that things will come back to normalcy in terms of technology spend in the coming quarters.
Amid all the challenges, the UK looking pretty resilient. What's the story behind that market?
I think UK was not doing well for about, let's say, 3-4 quarters before, right? I think there have been a lot of confusion. I think the political environment, instability of the government, et cetera, et cetera. But in the last 2 quarters, what we have seen is that, yes, there are going to be these kind of issues, but the industry felt that we have to be decisive, and there were a lot of decision-making that has happened in the US and in the UK market for the last about 2 quarters, which essentially saw the growth in the UK market significantly. And it's not just in financial institutions. It's across the industry. Even in the public sectors, I think people have taken very huge decisions to press on with the cloud transformations, digital agenda, and so on, including healthcare and citizen services. So all that is something that we are participating in. As you know, that we are one of the largest technology services provider in the UK market. And that shows in the numbers that we have published.
How much, of the, I suppose, the incoming deals that you have are based on perhaps ongoing projects that you have and essentially cost restructuring, rather than perhaps I suppose, sort of green fields of digital transformation. You know, what are you looking at here in terms of those incoming deals? What's the sort of split you're getting?
The overall, out of the $10 billion deals that we have signed in this quarter, and for the last financial year, we have signed about $34 billion worth of large deals. These deals constitute both cost and optimization type of opportunities, as well as growth and transformation type of opportunities. The interesting thing about this $10 billion of deals that we have signed up in the last quarter is that it's very broad-based across industries, across geographies. And there's one large deal there, which is about $700 million. But then barring that, the majority of the deals are all in the range of $50 to $100 million, which means that they're all, quick to execute. We need to execute those deals in, let's say, in about a year or 18 months and get the revenue going, get the transformation going, and speed to value seem to be the mantra that our customers are demanding.